veins, I've been driving this train. Years in this lane, there's no stopping this flame. Cause I came to the game and I changed it to play how I like, rearranged it to my own domain. Yeah, I got what it takes, made lots of mistakes, taking shots, skipping breaks, feeling lost, feeling great, popping off, singing straight, never stopped, never changed. All the squad here to play, and I've got something to say, yeah. I work hard each and every day, I get lost in the words I say. I don't push pause, no I push play. I won't stop till I make a change. I withdraw on the things I make. I turn flaws into flawless traits. I build tall, never capped in space. I won't stop till I hear him say 6 a.m. and I'm up again. I got tired eyes, need a cup of blend. That's right, in the AM, that's my only friend. No light, just the sun coming up on the horizon. I lose track of time, yeah, I move fast and climb a new class divine, yeah, true passion shines. And I'm through passing time, I choose stacking dimes. You snooze half the time while I move passing by. I work hard each and every day, I get lost in the words I say. I don't push pause, no I push play. I won't stop till I make a change. I withdraw on the things I make. I turn flaws into flawless traits. I build tall, never capped in space. I won't stop till I hear him say
Yo, yo, yo. Good morning, class. How is everybody doing? The market is closed. Correct. The market is closed. Yes, in honor of Jimmy Carter, who I never knew because I'm so young. But he lived to be 100 years old. As a result, the stock market is closed. But we are here anyways, in remembrance of Jimmy Carter. Jerem, what's up? How's the fam? Frank, Scotty, BZ, John. Look, we don't know what the quality of this stream will be. We don't know. There might not be any value in today's stream, but we wanted to come on and at least see you guys. How many of you guys are at work? Are you at work? So, John, yeah, I got our very own Heaven with a D pulled up here. Our very own Heaven with a D. Okay, we're gonna roll right into this because we don't got a lot of time. Life is short. How did that saying go? Life is short. Fill in the blank. You guys remember that? This is what I got for Christmas. One of the things I got for Christmas. Grimace says 1983 McDonald's Corporation. 1983 McDonald's, Grimace. Who here is older than 1983? I ain't. I was born long after 1983. Full size. All right, we're just going to run through this real quick. All right, share size. Some of you guys are overcomplicating this. Okay, start small. All right, who here is still trading small? Start small. Get the consistency going. All right. Keep it consistent, meaning you need to find a share sizing scheme that's consistent day in and day out so that, you can practice having consistent profits. If one day you're using 50 shares and the next day you're using 500, as a beginner, it's a problem. So keep your share size consistent, whatever you choose. If you're just starting out, just start small. Trust me on that. Okay. This is what I use. This is my consistent share size. This is an example of consistency. 1, 2, 3. Because I can't handle anything more than threes. Okay. Once it starts going beyond that, I lose my mind. So I just choose 900, 2700, 4500. Okay. With the middle one being your main usage one. That's like my go-to hammer. The 900, the smaller one, will be for the bigger size. This one will be for the, sorry, the 900 share size will be for stocks with bigger spreads, stocks that are higher priced. All right. If I'm trading a stock that's maybe $2 a share with tighter spreads, I'm going to use more so the 4,500. Okay. So it's not an exact science, but you do need to be aware of what is the range on the stock, because there's so many people, they are using, they're not being dynamic with their share size. Your 2,700, that's like your go-to. That's your middle one. So what does that mean for a smaller share size? So for a $10,000 account, this is what I would expect, a $10,000 cash account, because this is what I used. This 150, that could be probably adjusted to 75 or whatever. No, what's wrong? Start small. That's good. John. Yeah, John. Yeah, don't start 1K shares when you don't know what you're doing. You want to get experience. And basically, just keep yourself in the game. Because you can ask anybody who's trying to learn this. There's a lot of periods where you think you got it, and then you lose it. You go through, and that's normal. That's normal to have you turn the corner. We call it turning a false corner. You turn the corner and you think, I got it, only to come to find out you don't quite got it. But it's still a good sign to turn these corners. But there are these false corners where people will have success for 2 weeks and they think they got it. With the way the market's always changing and with the curve balls that always come, whether that's in unforeseen losses, yada, yada, yada. Anyway, yada, yada, yada. Could you even go smaller? Yes, you can. If you're even going smaller, you go 5, 15, 30. This is just an example. But the point is consistency. 1, 2, 3. The middle one is your go-to. So here, my go-to is 2,700. Here, my go-to is 50. Here is 15. And you stick with that. For example, yesterday I was trading mostly, because I'm experienced, I was using mostly 4,500 to 2,700 pretty much every trade. It was just 27 to 45. I have gotten to the point where now I do double clicks and triple clicks and ads. Okay, you don't need to do that to be successful. Goal, to gain flight time. That's the point of being small size, John, which I've already spoke to John on the phone, and John he's an oil rig man out there in the plains of North Dakota, slaving away. So very good line of work, I will say. Money is there, but he's trying to get to day trader status, and he's doing the right thing with the small size, because there's no other way, and it's like, you have to fail to learn. With a 7K account, what do you think a realistic daily goal should be? So a realistic daily goal, you would probably be close to using this share size. I would say anywhere between $10 to $50 is what you should expect to make. I do not believe in setting daily goals, because the goal every day is just to survive, is just to be green. And the market's not always going to be in a position for you to meet a goal, but to rephrase it, what should you expect with the share size? Anywhere from $10 to $50 on your green days, and anywhere from 10 to hopefully 10 to 30 for your max loss. I always believe in as tight of a max loss as possible. I do believe in that. Job Moses, new trader here. Where do I enter? What is the strategy? Oh my gosh. Dude, do you realize the can of worms you're about to open up? What new trader here. Where do I enter? Job Moses, first thing you need to do is make sure you have a therapist on dial. Because if you choose to do this career, I guarantee you will need a therapist. So start there. Another thing that I want you guys to do, and the short answer is buy the dip. Somebody came to me and they're like, how do you get the confidence to buy the dip? And, flight time, small size. There it is. Start small. That's how you get confidence to buy in the right areas. And you do that for a while, you start to gain confidence. There's stuff that's it's like practicing to swing a golf club. I was at a bar here in Scottsdale. The bartender asked us what we did. He was from out of town, a little darker complexion on the skin. I said, I'm a day trader. He said, oh, man. As soon as I tell somebody I'm a day trader, everybody's like, oh, I wanted to be one. It seems like everybody wanted to be a day trader. At least it seems. Anyways, I'm like, yeah, it's one of those things. You practice every day. It's like learning to swing a golf club. Right? I can teach you the form, but there's stuff in there that it takes time. Anyways, come to find out, he's like, oh, yeah, my uncle is Tiger Woods. He was actually related to Tiger Woods in some relatively close, and he looked like Tiger Woods. He really did. And his last name was Woods. But yeah, that was a cool little thing. Then we read on the internet that Tiger Woods had excommunicated his whole family. So he knew he was related to Tiger Woods, but it sounds like Tiger Woods' family pissed him off because Tiger Woods doesn't even talk to those. So he's kind of related, but kind of. So what? Hey, why don't you use 15 second time frame? It's just too tight. And this is what I've been doing for you guys and for my dad. That is focusing on the bigger time frames. I think that's where the bigger money is. Bigger time frames. Think bigger time frames, bigger trades, bigger money. And so there was a time when I thought, let's get down to the 10-second. And sorry, my voice is I'm used to not talking this much, so I'm already losing my voice. Point is, I just don't like it. It's too tight. Usually, and I'm not saying it's useless, but $60 minutes a day. That's all you need. That's how you practice consistency. That's how you get good at this. Stop copying me trading 3 hours a day. Stupid. Okay. Trade 60 minutes. Shut it down. Day in and day out. Discipline. Understand apex points. You guys know what apex points are? We're going to show you some live trading here in a second. And if you're not taking notes, you have failed today's class. This is another thing. Trade the front side. Once you notice that it feels like, do you guys know what front side is? It's not an overly complex concept, okay? And there is a little bit of subjectivity to it. But on every move on the stock, there's the ramp up, the move up, and then there's usually an extended sell off. You want to make sure you're buying the dips on the front side. If you're sitting there buying dips on the backside, you can make money. You guys see me do it, and you can get good trades. It is just quite a bit harder. Yeah, so Jimmy Carter passed. Okay, he was 100 years old. Guy's 100 years. Most of us are not making it to 100. I know this because we're day traders. Okay, I know this because we're day traders. The stress is high. The emotional toll, it's great. It's very great. But, you know, somebody's got to do this job, and we have been predestined to do this job, and we shall do it with joy. All right. So anyways, here's another thing for the class. Okay, this is just, you know, some of you already know this. Heaven with a D, check him out. All right, he is he's Heaven with a D. He's Heaven the G. I've been calling him Heaven the G. Or no, Heaven the OG. Check out his channel. If the live recordings here are good, okay? So when we're talking about apex point, on the current curl that's happening here, what price is the apex point at roughly? When I'm talking about apex point that we're looking for this immediate curl, when I say apex point, just so that we're on the same page, what price am I? It pulled back here, put in a bottoming tail here, and starting to curl. What price am I wanting it to curl to? Does anybody know? John, you're the reason I'm doing this freaking class. I'm just joking. I'm not being aggressive, John. I'm 446. Yep. So I actually have my line probably a little bit lower than the top. It's just a tad below, but you know, the same concept is 46. So we're at 411. We had a pattern down here. Now, what do you? I'm thinking of a specific pattern that this is down here on the 1 minute. What pattern is this? Am I circling here? It's a little bit of an ugly one. But what kind of pattern is this? W. All right. It's a W with a move to VWAP. This pattern here, it's the W pattern works here for 2 green candles. It hits VWAP, which, no surprise, is resistance. So we do get the pullback. We get a pullback here. What do I call this? I call this is this a 3-bar pullback? And this is where there could be some subjectivity, but in the classes I call this pullback here. What kind of pullback is this? Ended up being? Is it a 4-bar, 2-bar, 3-bar, 1-bar? Brother Butter, I call it a 1-bar pullback. And I call it a 1 because it's 1 red candle. The second candle didn't even break the low of the previous red candle. So I call this a 1-bar pullback. It's 1 red candle that went down. The second candle didn't break. Now, had this second green candle here, and it's hard to see, but if this second green candle had broke the low of this previous red candle, I would call it a 2-bar because it's you get what I'm saying here? I call this a 1-bar pullback because it's 1 red candle. This next candle didn't break the low of this red candle and started to go green. We got the breakthrough VWAP. So it's a W pattern that breaks out. 1 bar pullback that comes into the breakthrough VWAP trade. And then massive dump. We get kind of a goofy pattern here where it does curl and shoots back up to the apex here at 399, which you usually don't see that. No surprise, massive flush after the break of the apex point. But then it curls here in what I would call possibly a very ugly W pattern. But does curl, and we break this apex point up here as well. So this is a goofy pattern. The price action was a little bit goofy. We get up to here. Okay, and it kind of, there's a lot of volume at this point. We get a 1 bar pullback, and it's actually a 2 bar pullback is what I call this, because red candle, the candle next to it on my mouse here breaks the low of that red candle. So I'll consider that a 2 bar pullback. But the line, you could maybe call that a 1 bar pullback. But what happens is it fails. It fails. And so when it fails like that, that's where I usually want to stay out. Why? It's extended. So this is an example of a dip I would probably not be buying aggressively up here. Why? Because of, in totality, this thing has been on has run up. Ooh, it glitched pretty high. But nonetheless, here we go. It starts to curl against all odds. So I, with my 4,500 shares, here's some red on the tape. Price drops a little bit. I get in a little bit late. There's a little pop. Notice how quick I'm getting in and out. I go over to this ticker for a little bit. I probably go back to the other one. Let's see. There, back to this one. So anyways, at this point, the target is still 446. We get a little, is the stream lagging? Okay, good. Fat GQ. So much hindsight teaching when you're in the moment, you won't recognize 1 bar, 2 bar, 3 bar, 4 bar. I think you're wrong. I think you're wrong. So that's unfortunate for you. So anyways, here we go. At this point, we get this red doji here, but then the next candle starts to go green. So I'm thinking, all right, here's not hindsight trading. I don't even know what happens here, but I can tell you right now, the target's still 446. We put in a bottoming tail here at 380. We get the surge of green that tells us buyers are there. Surges up, a little bit of selling pressure in the form of this doji, but then the candle after that starts to go green and it starts to hold. So that's why my finger's on the buy button to catch a dip. Here's an example of a micro dip. So we saw the little bit of red. Notice how slight the dip is. It's not, this is an example of, we got the green candle right here. Okay. And this is, again, somebody might not take this kind of trade, but for me, I'm thinking 446. I'm looking at the 5-minute chart. What kind of pullback is forming on the 5-minute chart? Don't listen to Fat GQ. He is stupid. He is absolutely stupid. We're talking about 1 bar. Look at, so it's a 1 bar pullback on the 5-minute. See how we were just talking about that on the 1 minute? And notice how Fat G was completely, he's never going to be a day trader. So do not listen to him. Same concept is now forming on the 5-minute chart. So although the 1 minute's a little shaky, we have 446 as the apex point. We have a 1 bar pullback on the 5. It's a 1 bar because now it's very slight. But this next 5-minute candle is starting. So in this case, my formula in my head is thinking 1 bar pullback on the 5. We have sellers that tried to take it down right here, and now buyers are coming back in. On top of that, this thing has already proven a lot of strength. So this all comes together for this opportunity to trade this. A slight dip. There's the dip. I'm a little late to get in. See how I'm late to get in? When I see this, look at this. I'm actually surprised by this. I see this, but very quickly, I'm like, ooh, that looks good. So I get my finger on the trigger, but I'm waiting for a dip. There's the dip right on the tip. I'm a little late on the dip, but nonetheless, I caught the dip. I jump in, and this is where I want to start to see it accelerate. It starts to confirm acceleration, so I try to hold it as best I can. At this point, I'm up $1,000 on the trade as it runs to the apex point. At this point, I usually try to hold for the break of the apex. And this point right there, see how I held it for the break of the apex? We went right to 449. We went right to 449. And it didn't break through right away. And as soon as it quickly rejected, as soon as I saw this, basically the highlighted box bounce off that level, as soon as I saw that, I said, taking the profit. Because this is a flush risk zone. Why is this a flush risk? We're right at resistance. We have high volume. People were anticipating the break through 449. It did not break right away. This is an area where you could see flushes. The 1 minute pullback on the 5-minute chart has formed. Will it fully break out? I don't know, but I can tell you right now, I'm up $1,500 on this trade. What I would consider a pullback trade. On the green candle that I got in here, I waited for the dip. Notice how the dip is a broad term because the dip that we saw there was not very big of a dip, but it was there. Now, look, this sort of pattern on another day could fail. So there was no way to know for sure if this was to work. There was no way for sure to know if this was to work, but the opportunity was there. The buyers had already proven strength in this stock. We had a nice 5-minute breakout with a 5-minute 1 bar pullback. We put in, you add that in as well to the 1 minute chart. You got a nice bottoming tail here at 380. Buyers come in with speed and shoot it right back over 4 and even take it almost to 420. This is already a big move. Sellers come in, no surprise, because they're thinking possibly backside. And I would have thought so too. And that's why I went and looked at another stock. Anyways, after this red candle forms, comes this green candle. And that's when I'm starting to think, short sellers are potentially about to get stopped out. On top of the 446 level, on top of the 5-minute 1 bar pullback, on top of, you start to add all this together. Anyways, I take the profit here. All right. Here's a little dip off that level, and I want to go for that dip. Okay, notice how I tried to buy that dip off 450. Notice how quick I'd bail on it. Click, click. So when we talk about 3 seconds or less, you got to understand that sometimes these trades are less than 1 second. Because this is a high volume scalp. This is fundamental to trading 50-50 effectively. This is why you need hotkeys. Because I took the stab on the quote dip, went from 450 to 439. I punch it. I get filled at 441. I don't like how it went red instantly on me. Back out within less than 1 second. Dips again. And I'm put my finger back on the triple to try to buy the next dip. Price dips down to 430. Again, this is within a green candle. This is within the 5-minute candle. I try to buy the dip at 4:30. There it pops up, but the spreads open up a little bit. So I'm probably going to cut it right there for a loss. Arguably, that trade could have been green. That could have been a green trade because it did go green on me, and I could have just taken it there. I could have taken a break-even trade there. And the reason why I should have taken a break-even was because the spreads opened up so big. So no surprise we get a flush. Now, and I did take a bigger loss there. At this point in the day, I'm up $7,500. But guys, that's the basis of the strategy. Okay, the fact that it rebounded there was after this basically a double top. The fact that it rebounded that strong does not happen a lot. It happens when it does happen, it means buyers are pretty strong. So that's why I get my finger back on the trigger and I start hyper scalping this 50-50. Now I struggle a little bit. And here's an example of a dip that you could buy at 420. You could have bought it. You probably would have stopped out for a loss already. I step away from it because of a couple reasons. I'm starting to lose money on it. It's starting to get shaky. The main apex point break already happened, which was a success, and it rejected, tried to make a comeback, and now it's struggling. So at this point, I'm like, you know what? Screw it. We need to find something else. At this point, Silo's coming up. It's surging with volume. This one was a little tough. But again, I'm trying to buy dips. We saw a little dip there from 289 to 284. I recognized it, so I jump in. Hitting resistance at 289, so I don't hold it long. I'm just back out. All right, so the main point here with Silo, here's the main point. We have a strong 1-minute candle surging up with volume. This is where you can hyper scalp and buy the dips and get those quick wins. All right, easier said than done. As you can see here, I'm kind of going back and forth. Anyways, Kerr comes up, and again, I try for a break of high day on it. I get chopped up even more. And so anyways, this recording is up for you guys to watch. Why did I go with 4,500 shares versus 2,700? Because I was trying to be aggressive, Yuri. I was up at this point. I finished the day up 13,000 for 700. The reason being is I wanted to be aggressive because I was doing well on the day. Things were connecting. It felt like the kind of day to push it. Yeah. I don't use the MACD. How about a subscription option for just the archives? I have super. I have that. That's exactly what I got. Yes, John. John, exactly. The bottoming tail at 380 gives us some confirmation of a reversal. Yes. Yes. And so if you're looking at the 5-minute chart on Kerr, it was a one bar pullback on the 5. And then it broke. Let's just say this. It attempted to break through the apex point and break out. It struggled. The nice thing is it did hold. A lot of times, this is where it fails. I think Kerr was special because actually, well, there's a pretty hard failure. BBQ, what exactly is the 50-50? The 50-50 encompasses the entire way that I trade. It's just a name I give for the style and the approach of which I trade. So don't read into it too much. I don't know what Fat GQ was talking about. He's not talking anymore, though. I'll say that. He's just quietly listening. How many trades do you reckon you take in a day? Individual trades, usually about 100 to 150. Sometimes a lot more. In fact, I can pull it up here on TraderView. Let's go to Calendly. Where's Calendly? So we'll just look at the month of January here. Well, I guess a lot more. So some days 77 trades. In the past couple days, actually, I've been up quite a bit higher. So sorry, I told you a wrong thing. 100. So some days less than 100. But for example, yesterday, 209 trades. Tuesday, 367 trades. So far on this week, even though we're not traded Thursday, I'm up 32,000 this week. We still got Friday. So a lot. So if I would say if you want to be anywhere between 75 and 250 trades a day. We talked about the 1 bar pullback in earlier in the class. Which we'll leave this up for you guys to watch later. What if I'm below like 50 trades a day? Then I think you're not truly trading 50-50 in the way that I think you should be. I think you need to be up at those amount of trades. You need to be up at 75 to 300 trades. Just look at every successful 50-50. Look at every hugely successful 50-50 hyper scalper out there, right? And now they've changed the name to micro scalping. They're just, whatever the case is, they're trading 50-50. Look at how many trades they're taking. Look at how many trades I'm taking. So if you want to be like us, you have to copy it. If you want to be like me, you have to do what the successful people who have picked up this style of trading for me, they copied what I was doing. So what I'm doing, 75 to 350 trades a day. You got to get there. You got to buy the dips. You got to use market orders, right? If you were a student of another trading style, which is Ross Cameron's, you're probably used to limit orders. You're probably used to holding trades longer, probably used to pre-market trading. But when you switch to 50-50, as a lot of former Warrior students have done, somebody asks, "Oh, is there ever a reason to average down with 50?" And the answer is clear: no. Maybe in Ross, I've always taught it since the second I came to YouTube. And every successful person that I know who has come through this channel, which some of them I don't know. So it's not even worth trying to say, oh, he learned it from the kid. I have knowledge of several guys who for sure 100% learn from this channel, and I can't even get them to it's not even about getting them to, they flat out have no desire to tell people that. So it's like there's no, for some people it's like you can't even, so it's not even worth the battle. It's not even worth the hassle, because even the people I know for sure did it, they can't even be honest about it. So for the others that I don't even know, it's not even worth it. John. Ross put limit orders on the ass with offsets to prevent slippery. So Jerry Powell, the Charles Schwab margin, and guys, chime in on the margin stuff. Charles Schwab, I no longer care. I no longer look to see if it's marginable or not. Because my account has been, quote, restricted. But when I contacted Schwab, at first, the first time you contact Schwab, the first person you talk to is always an idiot. Must be related to Fat G. Because they're always like, oh, well, do you know what a restriction? I said, I know what the restriction is. Because everybody knows what it is. So what you have to do is say, get me to the margins department. Take me to your manager. I want to see, why isn't your ice cream machine working? And then they'll be like, oh, I'll look into this issue. And you say, and I tell them, you better. And then they come back and they're like, oh, okay. It was just Schwab no longer, for Schwab, their margin policy, they changed it to update it. For a while there, it was scary because you were right. There was a lot of leading gappers that were technically not non-marginable, meaning we couldn't use what we call settlement margin. 60 likes already, guys. Appreciate. Thanks, John. Yep, Yuri. Glad to have you with us, Yuri. You've been a huge asset. I've been seeing you talking in the Discord chat as well. So, guys, check out the Discord. We appreciate everybody who joins in. We have a solid group of good individuals here, and at the head of it is me. So if you don't like me, then you're not going to like the Discord. I got to show this to the trading dad. This is, and the funny thing is, this is pretty much exactly. And let me tell you something. The trading dad, I think, has turned a new corner. He made $200 a couple days ago. He made $100 yesterday. Because I had to go in there a couple days ago. I had to stand behind him. Because what he would do is, he would be too scared to take trades. He would see a big green candle and then he'd be like, oh, I missed it. Oh, it's going to reverse. I'm like, dude, you got to be more positive. Plus, after every trade, he would buy, sell, and then he would immediately go look at his P&L. And I'm like, dude, what are you doing? Like he would be like, and then it would be like a slow exit, and then he'd be like squinting over at his other screen, like, oh, what's my P&L? I'm like, dude, there's no time to look at your P&L. You gotta just keep your finger on the trigger And so what I did, it was ticker symbol DATS. And I said, I increased the share size to 500. I stood behind him and I said, keep your finger on the trigger, stop taking it off the buy button, and buy these freaking dips. And get used to selling really quickly. And there was some tension. He obviously was not wanting to listen, because he kept saying, well, to me it looks like it's dead. To me it looks like it's done. I'm like, stop thinking about to you, start thinking about to me. Because to you, you're not making any money. To me, I'm making money. You better. I could see a little tear rolling down his eye at that moment. But here's the point. I forced him to go out of his comfort zone. I said, I don't give a crap if you think it's going to flush. You're buying those dips with 500 shares. You're setting a max loss at 200, and you're going to get this done. He ended up making $200 that day. Yesterday, he comes in, and he was all excited with DATS. He comes in the next day, and he's stuck with just buying those micro fluctuations. He makes $110 yesterday. He even trades Power Hour. Picks up an extra $10. Now, there's going to be some rough moments. There's probably going to be some rough moments ahead for him, because, as you know, DATS just went straight up the entire day. So it's easy for people to make money when the market's great, and DATS was great. The real traders, or not the real traders, but things get difficult when the market when it slows down. It's a little tougher. It's a little tougher. Okay. So anyways, I think I'm going to cut the class there, guys, just because I got to go eat breakfast and go enjoy the morning. But I just wanted to come on and see you guys. So we got 78 gosh darn scallywag likes this morning. It's a beautiful thing. It's a beautiful group here. I couldn't answer all your questions. I'm sorry, I got thrown off by someone's stupid comment about basically not teaching well. You know what? I teach the way I teach, and you know what? If you don't like it, you can leave. All right. With that said, guys, I will catch you in the next video.